You are listening to the KE Report with your hosts Al Corlin and Corey Fleck, specializing in daily market commentary with a focus on commodity and equity markets. We are here to assist investors who manage their wealth by providing both our fundamental and technical outlook. Tune in daily at kereport.com and subscribe to our podcast under Corlin Economics Report.
Welcome in, Daily Editorial Time. We've got Jayant Bhandari on the line with us right now. Jayant, talk about an interesting remote right now. Corey and I are in the west coast of North America, specifically in the area of Vancouver, British Columbia, and you are in Switzerland to attend another gold show. You indicated when we were talking off mic that the interest at the two shows in the Far East was really waning. There were maybe at a high point in the attendance, there was maybe 45 people there. That is a very, very small number. My question is, do you feel that is, if you're a contrarian, do you feel that is a situation that might be signaling a bottom, or do you feel that this is kind of a dangerous time still in the precious metals sector?
Hi, thanks for having me, Al. Yes, I think this is a dangerous time in precious metals equities. I'm very optimistic about gold, but one has to realize that equity prices have done extremely well over the last few months. But when I go to the exhibition halls and these conferences, there are not enough people, which tells me that a lot of money that has entered the equity markets in the last few months is very likely speculative money that has entered through the channels of ETFs. This money hasn't really evaluated the companies they have invested in, which basically means that there is very likely a huge difference between market valuation and underlying value of these equities. And this money can very rapidly disappear in case they lose interest in mining companies.
Jayant, let's explore this topic a bit further, because are you saying that the money that has come in are from either swing traders or momentum traders that really have no background or no loyalty, in a sense, to this sector? All that they're doing is seeing an increasing gold price and even exponentially increasing stock prices, and they're just chasing it for what could be a short-term gain?
Mostly yes. And I have come across several institutional investors, the generalists, who want to invest 1 or 2% of their fund into the mining companies. And the reason is that by not having invested earlier in the mining companies, they are losing out, they are lagging the index. So to match up with the index, they want to get invested in the mining industry, mining companies, so that their clients don't see them losing out.
So do you think that they have been investing in, let's say, at the beginning of this year when we did see that run up? Because right now, a lot of these stocks and the metals are simply moving sideways.
Well, yes, and I mean, metal prices have, gold price has done a bit okay, but gold price hasn't really done all that much better. But equity prices for sure has gone way ahead of itself in my view.
So it sounds like you're thinking that there could be some pullback coming here.
I think there should be a healthy pullback because share prices of many companies has gone up too much too quickly, and share prices of a lot of bad companies have gone up as well. But Corey, this one very interesting thing. If you talk with the junior mining companies, their share prices might have gone up 50 or 100%, but they are still facing a huge problem in terms of raising money from the market. So investors, if you understand, are not interested in holding, not having free trading stock. They want free trading stock today. So again, this is a sign that this is very speculative money that is entering the market, because they want to buy in the stock exchange, but they don't want to finance these companies. And quite correctly, because some of the companies are actually have bad projects, but they have still done extremely well just because there's this feeding frenzy in the mining industry right now, in the gold mining industry sector.
That is, I think, a crucial comment, and something that I believe you and I chatted about when we were in Toronto at PDAC, and that was, even though these stocks had doubled, a lot of the management teams we had talked to, when you dug down into their finances, they were quite upfront and said, well, we are going to need to raise money here, but we just don't feel like we can do it right now, even though our stock has just doubled. And I think that is a crucial aspect, and one where people, when investing in these companies, still need to be very aware of the amount of cash that is on the balance sheets, because if you're looking with maybe a 6-month timeline until you run out of money or need to raise again, there's no guarantees that that money is going to be there like it is in a bull market. So, Jayant, do you put a lot of weight on how much cash these companies have in the bank?
Well, absolutely. Corey, I know one company that is trying to raise money at about 35 to 40% discount to its share price, and they are facing trouble in terms of raising money from the market. So yes, cash is extremely important, and investors should actually look at how much cash these companies have before they decide to invest in these companies. It's very important, Corey, I think, that investors value these companies, understand these companies before they invest in it, not just invest in companies at random, because then they will be participating in starting the same problem that we have had over the last 2 decades.
Okay, Jayant, let's touch on kind of your initial comment when we started off this interview, saying that you are bullish on the metal, but it sounds like a lot of what we're talking about is more short-term outlook, warning people about chasing stocks higher when they already have had a run. Can you explain why you're bullish on the metal still, and how long you think it'll take, or what type of a correction it'll take for us to set up another run?
Well, I mean, gold has done extremely well, Corey. If you look at the last 2 decades, perspective of the last 2 decades, it's up about 400, 500% in the last 15 years. The gold has been in consolidation mode for the last 5 or 6 years. And really, this consolidation had to happen because euro was not doing well, and big money could not really invest in gold. Big money had to flow into US dollar, and then US dollar became too expensive. So eventually, once US dollar is perceived to be too expensive and Swiss franc is perceived to be too expensive, this money will overflow into gold. Gold is merely going through a consolidation phase, and there's every sign, every star is aligned, in my view, for gold price to go up significantly higher into the future. It's just a matter of how long it takes to consolidate the price before it starts moving up.
All right, Jayant. It's always enjoyable chatting with you. I know that, as Al mentioned at the start, you are on the road now in Zurich for the gold show there. I'll try to get you back on when you have some more time, either during or after the show. Get your update from this one, see if there is more interest. Plus, keep us up to date with what you're seeing in the markets in terms of stocks and the precious metals. Thanks for your time, Jayant.
Thanks for having me, Corey and Al.